Hey, hi everyone. Hi. Hi, Damir. Hi, Brian. Hi, Muhammad. Hi, Josh. Can you guys type something in the chat box so that I know that the chat box is working? Hi, Damir. Thanks. Thanks, Muhammad. Hi. Welcome. Hi, Samir. Well, Samir, your dedication is amazing. I'm proud of you, to be honest. Nice to see you here too. Hi. Okay, I'm gonna start the introduction. I'm good, thank you. How are you? Really happy to see you in all our webinars. I'm going to start with introduction so that by the time I'm done, whoever is still joining our webinar would have joined already. Okay, so hi everyone. I'm doing a live trading session today. I think it's supposed to be a strategy clinic session. Okay, that means that we're going to go into live charts. We're going to go into trading view. And then we are going to kind of like analyze the charts together, okay, and I'll kind of show you guys how I use technical analysis to find my trades. Okay, so today's webinar is brought to you by IronFX. The whole point of these webinars is to help you guys improve in trading, looking for forex trading as professional. I can see why you're so dedicated then. It's good that you're spending so much time though, learning. Okay, so these webinars were brought to you by IronFX to help you guys grow in trading, to help you guys grow your account. So if you have any questions, don't be shy, ask in the chat box so that we can help you grow as a trader. Okay, other than that, disclaimer, I want to remind you guys that any information in this webinar should not be construed or considered as investment advice or any financial advice or any kind of advice. Okay, this is not a signals group. This is not a forecasting group. These webinars are brought to you for educational purposes only. Okay, just a reminder, trading can be very risky, especially if you are trading on leverage. So please be careful. As if you are new to trading, please be careful. Even if you are not new, you should still be careful. Okay. Okay, so other than Summit, I think the rest of you wouldn't know who I am because I don't really take you guys for these webinars. Okay, so my name is Cassandra. You can call me Cass if you don't already know me. Okay, I am a prop trader and an investment analyst at Everest Fortune Group. Everest Fortune Group is an award-winning research firm. We're the finalist for Best Forex and Equity Research for 2019, 2020, and 2021. 2022, it's not out yet. That's why we didn't put it there. But basically, we do a lot of research, back testing, and we advise brokerages, banks, hedge funds, financial institutions on where we think the markets are going based on our research and based on our back testing. Okay, so Me personally, in terms of trading, I've been trading for a few years now. I think the most notable thing I have done in trading is passing all these prop trading tests. So for those who don't know what these tests are, these are tests that requires a trader to do 8 to 10% profit within a month. So I've passed these tests multiple times. Only less than 2% of traders have ever passed this test. So I'm proud to be one of them. And I specialize in technical analysis. So if you guys do have any questions, okay, regarding technical analysis, do not be shy. Ask me in the chat box. If it's fundamental analysis, I don't encourage you asking me because that is not my specialty. My specialty, again, is technical analysis, okay? So our agenda for today would be key approaches we take to trading, a cheat sheet checklist that I always use, that we use when we are trading and taking on the markets together. Okay, we're going to take on the markets, but ultimately only get into a trade, or if you want to get in, please get in only if you agree with the analysis. If you don't get in, okay? Okay, so this is the checklist. Summit, you have joined so many of our webinars. I don't think I have ever shared this checklist before. So if you guys want to take a photo of this checklist, this is a very good checklist to reference to. Okay, I'm gonna stay on this page for 1 minute because I do still see people joining. Okay, I'm gonna stay on this page for 1 minute and then you guys can take notes of this or take a photo or whatever it is. Took picture. Okay, good. It is a very useful checklist, honestly. Let me just silence my phone while waiting for you guys so that it doesn't ring halfway or anything. Okay, cool. Everyone's got their photo. Everyone has gotten their notes on this. I'm going to move on. Before I move on, let's kind of explain some of the things that we will go through when we are trading or looking for setups. Okay, so number one thing that I always look for is, are there horizontal levels? Okay, are there horizontal levels? That means support and resistance. Horizontal levels, you know, that straight line that you can find on your swing highs and your swing lows, your support and resistance. The second thing is that, are there any trend lines? So the trend line is used to identify trend, whether it's going on an uptrend or going on a downtrend. Okay, so this is to help you identify momentum, same as channel. So every time you're going to chart, you want to ask yourself, are there any horizontal level that I want to highlight? Usually they are. If there's none, I usually move on from that chart. Maybe the chart structure just isn't great, so I just move on. Then trend line and channel is to help me with whether price is going up or down. Any other chart pattern, so wedges, triangle, double top, bottom, head and shoulder, inverse head and shoulder. Let me think, what other chart patterns are there that I can think of? Maybe the W, the M, you know, for helping you catch reversals. Okay, so these are some things. Another thing that you can use is, are there any death crosses? Are there any death or golden crosses? This is using moving average. Sometimes I use it, sometimes I don't, but it's just in the checklist. You can use it if you want. Any natural moving averages, that's another thing you can use. Stochastics, okay. Check recent 3 bounces reaction. If they line up nicely at a certain stochastic RSI level within 5% of each other, okay, stochastic RSI, are there any clear bullish or bearish diversion? So usually when I'm checking for stochastic or RSI or any oscillators like MACD, for example, I'm looking for divergences. Okay, correlation. So any strongly correlated currency pair that are supporting your bias. This is good to use, but this is more for Forex. But because I am a gold trader, XAU USD, I don't really use correlation that much. I wouldn't know what, I think the pair to correlate is actually USD CAD, if I'm not mistaken. Oh, no, sorry, that's for oil. XAUUSD, I don't think there's any other pair you can use for correlation, but let's say you are doing oil, like you're doing oil. So the pair that you will use as correlation is actually USD CAD. Why? Because Canada is a large producer of oil. Okay, so you want to see if oil prices go up, the Canadian dollar will go up as well. Okay, not all the time, but usually there is correlation. Okay, so same as other currency pairs. You want to see a currency pair. If you're looking at USD, GBP, for example, then you also want to look at other GBP pairs that are correlated. Okay, so that's one thing you can look at. The other thing is EUR and GBP are usually correlated. AUD and NZD are usually correlated. Okay, so these are the example. The next thing you want to find is, are there any reversals or are there any breakouts? So after you have identified all of this, you can then identify whether you want to look for reversal or breakout. Okay. This is basically our cheat sheet that we use here, and I do think it is quite effective. Okay, so Fibonacci, another thing that you want to master, I think, is Fibonacci levels. Samit, you hear me say this in so many of my webinars. Fibonacci is so crucial into trading. Other than the checklist before this, Fibonacci is super duper crucial because Fibonacci will help you find the strength of the support resistance. So the strength that we're looking for, you can use Fibonacci retracement, Fibonacci projection, Fibonacci expansion, and Fibonacci extension. Okay, so expansions and extensions. I will not be able to cover all these kinds of different kinds of Fibonacci today, but if you guys do have questions on this, I can try my best to summarize it as much as I can. But if you don't already know Fibonacci, I think you should go and master Fibonacci. Okay, and the best of all the Fibonacci's will be confluence. That means you have more than one Fibonacci levels lining up in the same area. Ideally, when there's three, okay, when there's three level, that's the best. Lining in the same area, giving us confidence that that area, in fact, is a very strong area. Okay, so one more reminder of today's webinar. Today's webinar should not be construed as trading advice. Okay, it should only be construed as educational only. Okay, so I'm going to move on to trading view. Okay, give me a sec, guys. I'm going to go on to trading view. Let me pull up my trading view. In the meantime, you guys can request for pairs you want me to do analysis on. So usually in my webinars, I try to do three pairs. The first pair is commodity. Okay, the first pair will be commodity, obviously. The second pair will be Forex, and the third pair will be cryptocurrency. Okay, so can I check if everyone can see my screen clearly? Can everyone see my screen clearly? Please analyze on gold. It's my favorite. It's my favorite as well. We'll definitely do gold. Before I start, can I just check everyone can see my trading view screen? Everyone can still hear me, can still see my screen clearly. I just need to double confirm because you guys are not responding, so I don't know if you can see my screen or not, or am I stuck? Okay, I'm gonna stay here for like a minute until one of you replies. Because I'm not sure if you guys can hear me. Okay, screen is okay. Okay, thank you. Thank you, Samit. Okay, cool. So let's start with XAUUSD. Okay. So I think, Samit, you probably joined this webinar where I called for a buy from this possible entry. The thing is, it didn't come back to our entry, but it went to our take profits. So sometimes you miss the trade because it never reached your entry area, and that's totally fine. You don't need to force it, okay? We do not need to force it. Okay, so let me just get rid of all this drawing. I'm going to leave the Elliott wave because I want to use the Elliott wave in our analysis for today. For those who are new here, you don't really know what Elliott wave is. It is quite a heavy topic, so I wouldn't be able to explain it. The gist of it is that you need to remember that price moves in 5 waves. So you need to identify the 5 waves. Okay, so the 5 waves that I have identified for Elliott wave is this. Okay, so from 1998, okay, I consider this wave 1, wave 2, wave 3, wave 4, wave 5. And after your 5 waves, usually price will move in 3 waves. Down, 1, A, B, C, and then another 5 waves. So I believe from my analysis that price is actually on another wave today. Okay, it's on a wave. So based on my analysis, I think this is wave 1, wave 2. Now we're in wave 3. So we need to remember the thing about Elliott wave is that within the wave, there are sub-waves. Okay, within the wave, there are sub-waves. So based on that theory, okay, right now we should be in wave 1, wave 2, wave 3. We don't know where wave 3 is going to end. Wave 4 and wave 5. Okay, then there's going to be an A, B, C. It's going to be an A, B, C, then another 5 waves up. Okay, so I think we are in wave 3 now. Okay, so the only thing I can tell you for gold, okay, give me a sec. Is that I think we are going, like wave 3 is ending and we're going into wave 4. So the thing about wave 4, if you guys remember, for those who know Elliott wave, you know that wave 4 cannot cross wave 1, okay, cannot overlap wave 1. So we know that the entry for wave 5 is somewhere between here and here. Okay, we know the entry is along this line. It cannot touch wave 1. So this is our entry for wave 4. Okay, so give me a moment to analyze. I'm going to do 2 analyses, okay, by the way. I'm going to do one where we use Elliott wave and then one of the traditional analysis. Okay, I think wave 3 is going to end here or somewhere along here. Okay, so I think it's going to end somewhere along here. Here, where the 2.618 is. Why? Because there's confluence here. There's a horizontal level here. Okay, so ideally, I think that's where price is going to end. Let's get rid of everything that's not relevant to us. Okay, and then from here, we kind of measure where we think wave 4 is going to end. Okay, guys, something is wrong with my. It's going to end somewhere around here. Okay, so ideally, wave 4 is going to end somewhere along this box, this green color box, and that's where we enter for the sell entry. Sorry, the buy entry. Okay, that's where ideally I think we should be entering for the buy entry. Okay, so give me a moment to see what levels there are here that could possibly make gold stop suddenly in this area. Okay. Other than this swing high area, I don't really see anything else. Okay. So basically what I'm calling is I'm calling for a buy. The buy is from this green boxed area, and the buy will be until this swing high area here. Okay, that's basically my analysis for gold. This is based on Elliott wave. There's a chance my Elliott wave count is wrong, but it's just based on probability. So based on probability, I think this is what is going to happen. Let me see on the smaller time frame if I can get any more information. So that's wave 1, that's 2, that's 3. No reason for me to think 3 suddenly stopped here. I think most likely 3 is going to stop there. Okay, and 5 is there. Okay, so perfect. I think this is all set up for today, which is a buy for gold from here. This will be our take profit. This is just an estimate of where I think is going to happen, and our entry or stop loss will be here. Okay. Okay, cool. Okay, before we continue with anything, right, there's one more thing I want to do. I actually want to confirm. Okay, I actually want to confirm that there is confluence here with other indicators. Okay. Give me a moment. Okay. I want to confirm that there's actually something there with the other indicators. So the indicators that I want to use for today is Ichimoku. Okay, Ichimoku is okay with our analysis. Bollinger Band. Why am I using Ichimoku Bollinger? Because these are the indicators that are using trend and using moving average to look for your trades. Okay, so I want to see if it makes sense to use, if our analysis even makes sense. Stochastics. I'm looking for divergences and RSI. Okay, so I'm going to change the setting for these. Okay, I don't see any divergence. Don't see any divergences. Shanghai is good. It's okay. Time for its turn. Okay, cool. Okay, cool. I think this is okay. RSI, time for turn. Give me a sec, guys. Don't see any divergences. I think we're good also. Okay, so I am biased that it's a buy. So I think if it comes to my confidence level, I'm like 85% confident that it's a buy. Okay, it's just that the entry, is this the best entry or not? That's the question. Okay, so it's a buy. The question is, where do you buy from? Okay, so you knowing that it's a buy, you would have already won like half the battle. Hey, Mowada, welcome to our webinar. Okay, you knowing that it's a buy, you already won half the battle. The question is, where do you buy from? Is the entry good? Okay, so this is how I would analyze if I'm using Elliott wave. I'm going to show you guys how I would analyze if I'm just using normal support resistance, normal trend line, and blah, blah, blah. Okay, this is the other way of analyzing, okay, which I want to share with you guys so that you guys, because Elliott wave is a little advanced, okay, so if you are new to trading or you're not that experienced in trading, you're going to have a hard time looking for trade with Elliott wave. Okay, so I'm going to show you like the easier way to do an analysis. Okay, let's remove everything. This in, oh, okay, it removed on both sides. Hold on, guys, let me, okay. Okay, instead of that, I'm going to use a different chart. Okay, so this is a totally different chart. Okay, it's a different broker. Same chart, different broker. Okay, I'm going to show you guys how I would usually, I would usually analyze my charts if I am not using Elliott wave. Okay, I need to show this option because this is the easier option to do analysis. Okay, number one, based on the rules that we saw earlier on the cheat sheet, you need to look for support resistance. Okay, but actually I much prefer looking for trend first. So the trend that we want to look is we want to use a channel or a trend line to look for whether price is going up or going down. Okay, so I think I've done this a few times already, and I don't think I'm able to find a channel, right? Channel, not able to find a channel. Okay, so why was that channel not valid? Because a valid channel requires 2 touches on top and 2 at the bottom. I can take it from this random place here, and then it will have 2 touches on top, 2 at the bottom, right? Okay, no, it doesn't even have 2 touches. Okay, so in this case, this is not a valid channel because it touched 1 time on top, 2nd time on top, but at the bottom, it only touched 1 time. It did not touch it. Okay, so this is not a valid channel. Therefore, we shouldn't be using this as reference. Okay, we shouldn't be using this as reference because we might get misled on where price is going. Okay, but other than that, I do acknowledge that price is on an uptrend. Why? Because price is moving, making higher highs. Okay, you can see all the higher highs. And then it's also making higher lows. Okay, so it's definitely, like, in my opinion, based on the higher high, higher low rule, it is going on an uptrend. Okay, so it is going uptrend. So we will accept that it's going on an uptrend. So therefore, if we're talking about our bias, okay, our bias number one is uptrend. Okay, your whole job as a trader is, okay, your only job as a trader, right, is to go on the chart as a technical trader, especially technical analyst. Even if it's technical analysis or fundamental analysis, your only job as a trader is to go on the chart, go on wherever you're getting your information, collect your information, collect your data, and then with the data and information that you have, you need to make a decision on whether you need to make a decision on your biasness. Okay, on your biasness or your prejudice of where you think price is based on the information that you've collected. Okay, not based on your feelings, not based on someone told you. Okay, based on the information and data you have collected. So based on the information that we have collected, that higher highs, higher lows, I think it's an uptrend. Okay. Okay, the second thing we're going to collect now is support and resistance. Okay, so I'm gonna collect highlight some support resistance area. This is a very good area of support. I don't think price will get here anytime soon. Okay, but it is a very good area of support. Let me just highlight this. That's a resistance, not the best resistance, to be honest, because it kind of cuts through structure a bit. Okay, but I will acknowledge that there is a resistance there. So I'm going to highlight this. I'm going to change the name to support or resistance or whatever it is, so that it's easier for me as a trader. It is easier for me as a trader. When I look at this, I know what is going on. Okay, so when I see resistance, I know that there is a resistance there. So I'm going to save this as resistance. Resistance and support. Okay, that's all the information that we have collected on the daily time frame. Other information that we can collect are actually Fibonacci levels. Okay, nothing lining up. The thing that I want to see is that this Fibonacci lines up close or on top of the support level. Okay, lines up close or on top of the support level. That is the thing that I wanted to see, but if it's not there, then we shouldn't force it. Okay. I'm going to go into my template, sorry. Give me a second. Oh, okay, I deleted the wrong one. Okay, give me a sec. We just edit this. Okay, I'm showing you guys exactly how you should be doing it or how I do it, because then if you are charting the same way, it'll be much easier for you guys as well. So it's easy to highlight support resistance, and then you want to mark it or note it with a name so that next time you yourself know what that you are marking. Okay, you don't want to confuse yourself. Okay, so I'm going to get rid of this Fibonacci levels because it's not relevant or information. Okay, by the way, guys, usually in my webinars, I try to do 3 pairs, but because today I'm showing you guys 2 different styles of trading, which is Elliott wave and your normal technical analysis way, okay, we would not have time to do 3 pairs, okay, or I can try my best to do 3 pairs, but after this, I'm going to do Ethereum, and with Ethereum, I'm also going to do Elliott Wave and your normal traditional pair. Okay, so today let's try to focus on 2. Most importantly is that you guys take away how to do analysis on your own. Even if you don't join this webinar, even if you have free time on your own at home, you can do the charting yourself and you can do the analysis yourself, because you have already learned today how to do the charting and how to do the analysis. Okay, so this is all the information that we have collected. Let's go down to the smaller time frame to see what other information we can collect. Okay, so the other information that we can collect is we cannot use this resistance anymore. Why? So on the daily time frame, this resistance looks really nice, right? It looks nice. There's a swing low here that lines up. There's kind of like this swing low, swing high here. It's not very strong one, it's there. And then price looks like it's rejecting this area. Okay, it looks like it's rejecting this area. That is why I highlighted it. And that is why you should go down to the smaller time frame to get even more information. So on the smaller time frame, on the 4 hours, I'm going to remove this resistance now. Why? Because this resistance is not relevant to us anymore. Price already broke the resistance. Okay, if price manages to break this resistance, it means this resistance is not relevant. It is not strong enough. We only want to identify support and resistances that are strong and would be relevant to our trading. Okay. Are we clear? Is everything good? Do you guys need me to repeat anything? Like, are we clear on why I'm removing that resistance? Okay, cool. Okay, the other thing I want to highlight is that I have found a new support. The closest support to price is actually here. Why am I using this area? Because price came here, it reversed. So this is a swing high area that is relevant. Okay, it came here, it kind of reacted off here, and then it reversed. Okay, so this is a support area that is relevant. Okay, so far these are the relevance. Okay, so I am going to highlight this as support, and then I'm going to get rid of this one because this is too far from current price. Okay, we only use the far away ones if we cannot find anything else. But in this case, I do see there's one very nice one here. We're going to use this. Okay, and even closer one here. Okay, there's an even closer one here. Okay, so what am I getting off here? If I were to come up with an analysis from this, it doesn't look like it's a very nice analysis. Okay, it doesn't look like it's a very nice or clean analysis. I was going to call for a buy here. Right? Do you think this is a probable one? I don't know. We need to see. Okay, that's when because we can't really get anything more, we go down to the even smaller time frame to see if we can find an entry or anything that will help us. Okay, so based on this smaller time frame, I do think there is a setup here. Okay, I think the setup is that give me a moment. I'm gonna highlight this. So resistance. This is too far away now that we are on the small time frame. This is too far away now that we are on the small time frame. And this would have been our setup for today. Okay, based on traditional entry. Okay, but the problem with this is that price is already on its way there. Okay, price is already on its way. Okay, I'm just showing you guys how I would usually use traditional support resistance, your trend line to look for a setup. And this is exactly how I would look for a setup. I would have entered here for a buy. Okay, put my stop loss just below that and then play the buy here. Okay, so it's totally different from Elliott Wave. Okay, Elliott Wave, our entry is quite far away. Okay, our entry is about 1890 area. If it pulls back to this area, that's where we enter. But for traditional TA, because we were going on a small time frame, there's actually a closer entry now to get in for a buy, but price is already on the way up, so I don't recommend it. And then now you combine it with other things like Ichimoku. Didn't come out. Okay, Ichimoku agrees with this analysis that it is a buy. I'm sure if I pull up Bollinger Band, I'm sure if I pull up Donchen Channel, I'm sure if I pull up BMI, statistics. Wait, I only use 3 because it's a 3 account. Okay. We've got a problem. Okay, so the DMI, for those who I think especially for Summit, because you joined so many of our webinars, but for the rest of you, if you don't know how to use the DMI is basically telling you the strength of trend. Okay, it's telling you the strength of trend. That means if this red line is below 25, it means that the strength of the trend is not very strong. Hi, Joe, welcome to our webinar. Okay, it's not very strong, and therefore, even if you get in for this buy, there is a chance price is not strong enough to push you to the take profit. Okay, because you need momentum, you need that push. Okay, you need that push. So like just pretend price is kind of like on wheels. Okay, prices on the skateboard. If nobody pushes the skateboard, if you don't put force on the skateboard cannot reach its destination. So right now, based on the DMI or the ADX, okay, it looks like trend is very weak. So even if you get in on this buy right now, there's a chance it won't reach your take profit because there's no strength in the momentum. Okay, although the DMI is agreeing that price is on the uptrend, Ichimoku is agreeing that price is on the uptrend. Bollinger Band is agreeing that price is on the uptrend. Okay, everything is agreeing that price is on an uptrend. So similarly to our first analysis on gold, okay, I am now even more confident. I'm like now 90% confident that price is going up, okay, and it is a buy. Okay, but the question is, right now, trend is not strong. So you can get in for this buy, but like if it's weak, maybe it's going to go sideways, it's going to consolidate or whatever. It might not reach your take profit in time. Okay, so one thing we have established for sure in these two analysis is price is going up. The second thing, the only problem right now is where do we get in for the entry? The first entry would have been here. We kind of missed it already. Price is already on its way up. Look at it, it's very weak. Do you see how weak the momentum is? Okay, if this is a strong uptrend, it will be like this. It will be green, and it will hit your take profit already. But because right now the momentum is weak, price is kind of slowly making its way there. Therefore, actually, if you guys want, right? If you guys want, because momentum is weak, there's a chance price might come down. If it comes down, here is your second chance of entry. If it comes on here, okay, this is your second chance of entry. You can consider getting in this area for a buy. Okay, you can consider getting in this area for a buy. If not, your next entry for the buy will be here. Okay, because I'm more confident our price is going up, we should only look for buy entries rather than sell. Okay, so right now the buy is either here for your scalper, your day trader, Okay, your scalpers or day trader. If you are scalping, definitely your take profit should be much lower, maybe somewhere around here, okay, or somewhere around here, okay. But for your day traders and your swing traders, you can wait for price to come back to this area. If it comes back to this area, you can consider getting in for a buy and play the wave 3 of Elliott wave. Okay, so that's all for XAU USD. Definitely confident that it is going up. Just where do you get in for the buy? Where is the best entry? Obviously, lower would be better. If not, this is a scalping move here. Okay, so let's see what Ethereum is doing. Okay, let's see what Ethereum is doing. Okay, so same. This is my analysis from yesterday, right? Summit would have saw this analysis. Okay, I'm gonna get rid of this. Okay, so my analysis is that price is going to kind of pull back to this area. Okay, this area here, hopefully it pulls back. If it pulls back, you can enter for buy. I'm not going to show you guys how I got this analysis because I use Elliott wave. We only have 15 more minutes. I won't be able to show you. Okay, instead, we're going to go to a clean chart and I'm going to show you how to get analysis using your traditional technical analysis that we would use. Okay, so let's start with the daily time frame. Okay, the first thing you want to identify is trend, obviously. Can you guys let me know? Do you think price is going up? Do you think price is going down? Can you guys let me know in the chat box? Just looking at this chart. Thank you. Thank you so much. Okay. No answers because I think a lot of people are confused on where price is going. I see price moving kind of like this expanding kind of wedge thingy. Okay. Okay, I want to believe that price is going down because if anything, right? Okay, even if we take it on a horizontal level, let's say we take this on a horizontal level, it kind of looks like price is doing this like consolidating in this area, right? It kind of looks like every time price comes to this area, it reverses. Comes to this area, it reverses. Comes to this area, it reverses. So it kind of makes me feel like it's going to reverse one more time. Okay, so I'm a bit more biased based on the data and the information that I've collected or I see in the chart. I'm a bit more biased that there is going to be some kind of like bearish movement from here. Okay, that's what I think might happen. Okay, let's see if that's really what's going to happen. Okay, so let's try to highlight some levels. I always highlight horizontal levels first. Remember our cheat sheet from the beginning of the webinar, we try to highlight horizontal level first because when it comes to technical analysis, when it comes to strength, okay, or priority, we think that horizontal level plays more importance than other forms of technical analysis. Okay, support and resistance on a horizontal level, we think is a very strong structure. Okay, so based on this, it makes me want to think that price is going to go down from here. Okay, I don't know for sure if it's going to go down or not, but I hope it goes down, okay, because then it will coincide with our analysis on Elliott wave. Okay, so if that's the case, let's just be a bit more biased that it's going to be a sell. If I were to get in here for a sell, my take profit will be obviously above the swing high, where this wick is and where this rejection. This is a good sign as well, actually. this wick here is a good sign because it means that it's rejecting. Price is rejecting this area and it wants to come down. That means that price is not strong enough to push to break this area, and therefore it needs to reverse. Okay, for those who's never heard this analogy, let me share with you. So this is you. Okay, you are walking, sorry, it's a very ugly drawing. Okay, you are walking to your right, you're walking. The direction right or left indicates whether price is going up or down. Okay, you reach a door. If the door is very heavy, it's locked, there's bricks behind the door is made out of stone, blah, 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 there's a lot of resistance, you will have no choice. You can keep pushing the door, you push and push and push, and you can't open the door. You keep knocking the door won't open, you have no choice, you will reverse. Okay, you make a U-turn and you turn back. So similar with price, when I see a strong wick like this, right, it gives me an indication or tells me a story as a trader that when price got here, it keeps trying to push this door open. It keeps trying to break this area, but it failed to break this area and therefore it had to turn back. So therefore, I'm a bit more biased that Ethereum is going to turn back from here. Okay, so we know, what have we established? We have established that this area is an area of key level. This resistance is a resistant key level. So this is where we should enter for our sell, right? We enter for our sell here, we put our stop loss here, because in case it tries to break the fourth time, we hope that it doesn't reach our stop loss and it comes back. We hope that it tries to break this resistance. It fails again for the fourth time, because it's 1, 2, 3. If it comes back here the fourth time, it fails to break and it reverses, then it missed our stop take profit. Okay, so right now, can you guys let me know in the chat box? Hold on. Sell entry, I put it blue. When it's sell, when there's an entry, I put blue. When it's take profit, I put green. And when it is a stop loss, I put red, because I associate red with losing. I associate red with losing. Okay, so we know our sell entry is here. We know our stop loss is here. The next question is, where do you think the take profit should be? Any idea? Can you guys let me know in the chat box? No, no one has a guess on where the take profit should be. Okay, cool. There's no guess. I think the last swing low. Okay, thank you, Joe. That's a very good answer. That is one answer I would have given as well if I was in, if you asked me. Okay, so the last swing low is a good area to put your take profit. Why? Because price is attracted to key levels. So key levels are your support, your resistance, your support. These are your key levels. Price is attracted to this area. It's like there's a magnet there, and price tends to want to keep going back to that area. Okay, but the thing is, I do find that along the way there are other levels that price might stop at. Okay, I think price might stop here, because there's a swing low here, swing low here. This is not the breast swing low, okay? This is a very pathetic swing low, but I do see a swing low there. And then there's a swing low here. Okay, so before price gets to this take profit here, there's a possibility, I think it will reach here first. Therefore, that's why when you see a lot of traders, they have take profit 1, they have take profit 2, take profit 3, 3, whatever. They have multiple take profits because before they reach the furthest take profit, price will pass the first take profit and second take profit. So if you were to get into this trade, your take profit will be either here, okay, or here. Okay, that's the further one. Okay, or if you want to be even safer, we go down to the smaller time frame to see if you can find a closer take profit. Okay, on the smaller time frame, you're going to find a lot of things. Okay, on the smaller time frame, you're going to find a lot of things. One thing I do see is there is a support here. Okay, it's not the cleanest, not the best, but I will acknowledge that it's here. Okay. Why am I putting so many take profits? Because depending on your trading style, if you are a scalper, by the time it reaches this last take profit, it would have been days already. Remember that one candle is 4 hours, okay? It's 4 hours. So from here to here, it took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. It took 20 candlesticks, which is 80 hours. 80 hours is about close to 4 days, I think, 3 days, about a little over 3 days. So by the time it reaches here, it would have been 3 days or maybe longer. Okay, so this is more for like swing traders. This maybe by the time reach here, it will take 2 days, and maybe by the time reach here, it will take 1 day. Okay, so depending on your trading style and how long you want to hold your trade, a closer stop loss may be better for your lifestyle, okay, for your trading style. Okay, so your entry, now that I go down to the smaller time frame, I can adjust it. So anything closer to this, the closer you are to your entry, the better it will be. Your stop loss will definitely be here. Okay, the closer you are to your stop loss, your entry, the better it will be. Hopefully when it comes here, it kind of just rejects this area and then it comes back. Okay, so we're hoping the only way I will get into this is if it comes here the 4th time. Okay, remember on the daily, we saw that it came here 1 time, 2 times, 3 times. We missed the 3rd one. The 3rd one would have been a beautiful entry for a sell. But let's say it comes back in the 4th time, that's when I will enter again. If it doesn't come back on the 4th time, I won't enter. I won't just come in now. Why? Because if you come in now, look, I don't know if you heard this book, Rich Dad Poor Dad, okay? That book is about property, okay? So it's not about trading, it's about property. But if you think about it, buying and selling property is the same as trading, because we're just buying and selling currency. It's just we're buying and selling, but we're buying and selling different things. Okay, so in the book, Robert Kiyosaki was saying that your win should be at entry. The time you enter, you should already be winning. Okay, so therefore, even if you think this is a sell, right? If you get in at a bad entry, you are already losing and you already have a disadvantage. Okay, you would already have a disadvantage. So to win is to get in at the best entry, the best possible entry you can get in on, and then you get in for the sell. That way your risk to reward is good, your risk is low, and your chances of higher profit is there. Okay, so let's say you were to get in here at the best possible entry, you just hold it to this area. Your trade would have been 2 to 2 point. Okay, it's a 2.3 kind of trade. That means if $100,000 account, you're risking $1,000. If we are wrong on this, if my analysis is wrong, it will just hit your stop loss. That's totally fine. The thing about trading is there's never 100%. There's nothing in life that is 100%. Okay, you can cross the streets today. Let's say you cross the road and there's not even 100% that we will make it alive to the other side of the road, because maybe on the way crossing the road, you get hit by a car, you get hit by a bicycle, maybe you have a heart attack, maybe something, you faint in the middle of the road and a car bangs into you, something, okay, something might happen. Okay, there's nothing in life that is 100%. It's just finding high probability trades. Okay, so high probability meaning that when you cross the road, you look left and you look right to see if there's any cars, you use a proper pedestrian, you use a proper traffic light crossing or whatever it is, that will increase your chances of making to the other side of the road safely. Same for trading, okay, using technical analysis, confirming it with different kind of technical analysis, confluence, correlations, whatever, that will increase your chance of winning. Okay, so the correlation that we've used is that we have already used Elliott wave. Okay, we have already used Elliott wave to confirm there is correlation. So when we use this kind of trading style, we know that our bias, our forecast is that price will come down here, and then you can go up. So same, you enter here for a sell, you sell it to this area, we go back to this analysis, where it reaches this area, you can enter for a buy. Okay, so that's actually how you increase your chances of winning in trading and making profit. Okay, so if it comes back here a fourth time, I will consider getting in for a sell. But the one thing that I want to find is actually a reversal pattern candlestick. So reversal pattern candlesticks. Okay, I will not have time to go through this with you because we have run out of time. Anyways, this is a topic on its own, so I can't cover it. Okay, you go type reversal pattern candlesticks on Google and they will show you all the different kinds of reversal pattern candlesticks. Okay, just refer to this. Okay, if when price gets to this area, if it gets to this area for the fourth time, it rejects, you will see a reversal pattern candlestick, and then you can get in on your sell. You sell it to this area here. Okay, you sell it to this area here, and then using Elliott wave, actually from here you can get in for the buy. Okay, so that is my analysis for today on Ethereum and gold. I hope you guys learned something. Only get into trades if you agree with my analysis. Remember, this is not a signals group. This is not a forecasting group. Everything I share in this webinar is purely educational. Okay, there's a chance that I might be wrong. You can go to any other trader. There's a chance that they may be wrong. Okay, also. Okay, so thanks everyone for joining. I'll catch you guys again next week, same time, same place. Okay. Again, I hope you learned something. Thank you, Damer. Thank you, Joe. Thank you, Mowada. Thank you, Samuel. Thank you, Samit. I'll see you again, obviously. Thank you, Brian. Thank you, Sasa. Thank you, Moana. Thank you, Joesh and Sarah. Okay, I'll catch you guys again. Bye, everyone. Take care. Bye. I'll catch you guys again soon. Okay. Okay. Bye.